What is Murabaha, cost-plus financing, in digital Islamic banks? Imagine buying a car or a house without paying interest. Instead, you and the bank agree on a fair price upfront. That's what Murabaha is all about. It is a common Islamic finance method that follows Islamic law. In Murabaha, the bank first buys the asset you want, like a car or property. Then, it sells it to you at a price that includes a clear profit margin. This profit is agreed upon before the sale happens, so everyone knows the costs from the start. You then pay the bank back in fixed installments over a set period. This way, the transaction avoids interest, which is not allowed in Islam. Instead, it is based on a trade of goods with a transparent markup. Now in digital Islamic banks, Murabaha works a bit differently but keeps the same principles. These banks use online platforms to make the process faster and easier. You can browse assets, submit your purchase request, and see all costs in real time. Digital tools help show the exact price of the asset, the profit margin, and your payment schedule clearly. This transparency builds trust and makes sure the deal is fair. Key features of Murabaha in digital Islamic banks include the bank taking actual ownership of the asset before selling it to you. This makes sure the transaction is backed by a real asset, which is important in Islamic finance. The cost price and profit margin are fully disclosed to you, so there are no surprises. Payment plans are fixed and clearly written down, avoiding any uncertainty. All documents are carefully prepared to meet legal and ethical standards. People use Murabaha for many things like buying a car, electronics, or even real estate. It is also used for trade financing and helping businesses with working capital. Digital platforms make handling these contracts quick and simple. You can complete installment payments online and get customer support easily. This makes Islamic finance more accessible and user-friendly for everyone. From the Islamic finance rules point of view, Murabaha is a lawful and ethical alternative to interest-based loans. Some scholars see it as a temporary solution, preferring profit hand-loss sharing contracts. But because Murabaha is clear, practical, and compliant with Islamic law, it remains the most common method in Islamic banking today. Digital Islamic banks have made it even easier to use, bringing Islamic finance into the modern age with speed and transparency.